So as Bitcoin has continued its march and become more widely spread, more widely used and known, the concept has arisen of the Bitcoin Maxi, or the Bitcoin maximalist. In your eyes, how is that term being used? Would you consider yourself one? And I mean, some people are labeling Jack, once again within the framework of the controversy we're going to get into, as one as well. What are your thoughts on that term?
Yeah, I mean, so it was an epithet created by Vitalik, the founder and manager of Ethereum. And so he came up with the term maximalist, and that's an epithet. And so somebody that says Maxi is using a diminutive of an epithet. And you can kind of tell if somebody uses it, they don't really know much about Bitcoin or Bitcoiners, or are sort of an active antagonist or denigrator. Now, many Bitcoiners have said, okay, this is a slur directed at me. I'm just going to go ahead and own that, like many other communities have decided to own slurs sort of directed at them. And they'll just say, yeah, F it, I'm a maximalist, whatever. But it's really up to the person. And it's not something that I think would be acceptable for someone outside to sort of sling it at somebody. I call myself a Bitcoiner, and that's self-defined. There are other Bitcoiners that wouldn't consider me a Bitcoiner because I'm like not hardcore enough and I don't code stuff like that. And I'm not a cypherpunk, and they have like a higher definition on the tech side of what determines a Bitcoiner. And I might not consider them a Bitcoiner because I don't think they're, investing enough of their net worth in it or something like that. So it's really just based on your own personal definition. But I don't like it when altcoin fans and denigrators of Bitcoin will sling around words that they are.
They love to sling that one. They love to sling that one around.
Now, I have a little bit of empathy because there are obvious scammers, and there are also people who've fooled themselves into be scamming. And then there are some people that are working in crypto like that mean well and think that they're doing something, that has societal benefit. I think they're wrong, but I don't actually question some of their motives. And, and they're labeled with the term shitcoiner. Right? Like they're shitcoiners.
Yeah.
And I would call them a shitcoiner. So like, I can't really like throw those stones and be too sensitive about somebody throwing something back. Right.
Or maybe you can, I don't know. Some people, if the true believers in any approach towards the blockchain world, some are true believers. And I think like maybe if we're wondering when the Bitcoin Maxi slur might be properly used, it's really just when some people are extra annoying on Twitter.
I mean, the only defense I have there of like, why it's okay for me to call them a shitcoiner and them not to call me a Maxi is that I'm right. That's it.
Well, there you go. So, okay. So for Bitcoiners or Bitcoin Maxis, does that leave any space? And if so, how much space for other players, other currencies? And is it a Bitcoin universalist, or are we just saying, okay, we prioritize Bitcoin. We know that this is the most effective system for for reflecting the values that we wish to reflect, and there's really no space for anything else? Because I do speak to some people like that. Or is there a space for other players in the cryptocurrency game, but they need to be adhering to the Bitcoin underlying principles as much as humanly possible in their activities?
So there's a lot to tease apart there. So first, there are Chuck E. Cheese tokens, right? They exist. You can go to an arcade and you can check in some real money, and you can get some fake money. You can get some casino chips at the MGM Grand, and you can only use them there in the casino. And they have their reasons for doing that. And they like to have that currency, there in the casino. And Chuck E. Cheese likes to have their tokens there. It kind of is a lock-in. And if you end up with a bunch of tokens when you leave, you're like more enticed to come back, things like that. So, what do we call like a payment token or a friction token? Like, there are reasons for that. They don't need to be decentralized. If you try to make them decentralized, then by definition, you're in 24/7 open competition with Bitcoin to be money, and you're going to lose, which every single one of these has over time. So I think, the race for money was over long ago. It can't be a centralizing. That's the problem with proof of stake, is it's centralizing over time. It actually doesn't matter how centralized or decentralized or whatever they claim like today. The fact is that it centralizes more over time. That second derivative of the vector that it's on is what's really important. And Bitcoin decentralizes over time, and proof of stake actually centralizes over time. So it's just dealing way more fat. It's more centralized control. It's kind of the same thing we've been dealing with for millennia. As far as like other uses of it, I mean, like NFTs are totally orthogonal. It's not trying to be money. It's not trying to be store of value. I think it's, just like digital collectibles. The narrative is like dramatically puffed up way above what it actually is, which is like you own the hash to a signature, you don't own the JPEG. Like all these things for the most part are living on centralized services and, can be removed and people can change it at their whim if they want to, things like that. But in as much as like there's a strong community around some type of collectible and, if something goes wrong with the system, the community can kind of like collaborate on putting it up somewhere else and then, let the market start over again. And if we were used to having, some CryptoPunks being valued at X, they'd probably be valued at X minus a little bit. If you had to kind of restart it somewhere else, it's not that big a deal. Just doesn't have much to do with Bitcoin. I think what frustrates Bitcoiners is just kind of all the noise about it, because I'm seeing, hundreds of business plans and, new startups raising money and making noise, essentially having just replaced the word blockchain from a 2017 business plan with NFT and claiming that it's going to do something for healthcare or royalties or rights or all this stuff that it can't do. Mm-hmm. And it's just kind of funny because this too shall pass, just like every other altcoin narrative has come and gone in the past, whether it's, World Computer or, it's going to be DeFi, it's going to be ICOs, it's going to be crowdfunding, it's going to be this and DAOs, like all these different things. They just kind of come and they're hot for a little minute and they pump all those things and then they crash back down and they move on to the next narrative. So it's just kind of it's just like an assembly line that keeps on moving these hamsters through the snake.
And so that goes directly to what, at least the hostility that Jack expressed, in that at least my interpretation was that these non-Bitcoin projects in the cryptocurrency world that express themselves as you mentioned as NFTs, decentralized finance, DAOs, and things that do not have the same, really fundamental privacy and decentralization qualities that Bitcoin does, that a lot of them are being funded by these VCs and the venture capital firms, and nobody is really objecting to the idea that in the current web environment, they capture a lot of the value. The private investors, other than in a handful of cases like the Facebooks of the world that appreciate heavily in the public markets, these private investors and wealthy investors, they get access to a project and they capture most of the value and the appreciation from it. And that's leaving everybody else out of the game for the most part. Is that how you understood the kind of core of Jack's beef as well?
I think that was probably like a secondary or tertiary objection. Mm-hmm. I think the main one is just like the immorality of it and just basically what's going on. And it's been going on since, 2012, 2013, the first sort of pump cycle in Bitcoin. When it hit a peak in 2013, there were a bunch of altcoins launched then. Mm-hmm. Then it happened again in 2017 and there were a ton of altcoins launched then. Most of them are dead. And now you're kind of seeing it again with, the new batch of altcoins being launched and coming to prominence. And essentially what it is from the VC standpoint is short time to liquidity. It's literally the second slide on every VC raise deck that they pitch LPs with, is that they can get short time to liquidity with these instruments because they can create money out of thin air. They're not regulated today the way that they will be in the future. Just like there was a moment in time in the aughts when you could do online gambling and make tons and tons of money. And then that kind of just went away because the regulators came down and chopped it off. So right now, as has been for the, basically the 2017, 18, through now, you've got this moment in time where you can, in the favored phrase among these VCs is, we can make our own weather, because there's nobody holding you to account for how you market these things. So you get in bed with one of these people, they, try to find a professor with great credentials or some coder that, speaks well enough or sounds super smart or whatever. And they, pump one of these things up, they get their buddies on board. they all talk in sort of private rooms and like with their friends and stuff. And there'll be like, 10 or 12 firms collaborating. One will buy in at this round, and then the other ones all agree to step up the value here. Quid pro quo being that if they start one, all the other firms will pump up the next valuation and kind of create this price history of like round values stepping up to the point when it finally gets available to retail. Even if they, dump it a bit, it still is a big step up in value because they already are up, 20 or 30 or 100x from when they invested at the beginning, right? And that's liquid, right? That's liquid. They've got the money. Their LPs are happy. They can raise another fund. So you take something like Andreessen Horowitz, which has raised like $3 billion, getting their 2% AUM on that $3 billion of crypto funds. I think it's $4 billion now, actually. Of crypto funds, and they can just pump these things like crazy. So, they buy a big chunk of like Solana tokens, which is something that's minted out of thin air. That's a centralized team that can shut down the network at any time, that can censor transactions, that's not decentralized and doesn't even claim to be. It's just outside the reach of the current regulatory regime, but won't be for long. And they can put their whole army on, Clubhouse, on Twitter, send out Chris Dixon, send out all these people to go and talk it up. Talk about how amazing it is, talk about it on the All In podcast with Chamath and David Sachs and all these guys. And then, they can sell out of their cost basis plus some and ride the rest for a free call option as much as they want. Not to mention they're then in the, the angel and seed rounds for all of the other stuff in the ecosystem. And like Solana, all the DeFi tokens in the Solana ecosystem are notorious for doing exactly what you said, which is the VCs taking essentially all of the upside before it's available to the public anyway. So, so it's quite a racket.
This holiday season, give the gift of Bitcoin to your loved ones. Swan delivers your Bitcoin gift along with our world-class education and client service. Create a Bitcoin gift and wrap it with a custom message for your family and friends. Dash away with your gift. Your recipient will receive an email right away, that easy. Give the gift of generational wealth. Give Bitcoin.